Hi, it's Dave. So today, Tesla stock made a big move. It jumped $60 or 8.6%. And in this video, I'm going to dive into some of the reasons behind this big move. All right, so here we have a chart of Tesla stock price today. It closed at $762, jumping 60 points, and it was up 8.6%. Which is a huge move for a stock like Tesla. Market cap is about $730 billion. And if you look at this chart here, Tesla stock price just had strength throughout the whole day, just moving up. All right, so in this video, I want to go and dive into kind of what are some of the bigger reasons and the context behind Tesla's big move today. Why did it jump so much? I think there are several reasons. And number one is the blowout delivery quarters that were reported over a week ago. Typically now, Q1 for auto sales and for Tesla have been historically low, and it's just a seasonally weak period. However, Tesla completely bucked the trend and they delivered a record quarter of 185,000 vehicle deliveries. And I think this just surprised a lot of investors in the market because people were expecting some kind of weakness after Q1, kind of low delivery numbers, a weak Q1 earnings, and kind of maybe it could have spawned a few or several months of stock weakness. However, that kind of waiting for weakness is now gone, and the opportunity to see weakness in Tesla stock is gone. And so now you have several things happening. One is you have some shorts and smart shorts that cover, and then you have some longs that may be on the sidelines. This Q1 delivery number has given them the impetus and the encouragement to jump in before it's too late. Now you might ask, okay, why didn't this happen last week? Because the stock price could have jumped. However, last week we kind of saw a big lag throughout the whole week. And actually a lot of times I've seen this, and it's quite normal. There are a lot of factors going on. Sometimes you might have some big positions of market makers that have sold a lot of calls and who are betting on Tesla stock to remain in a certain kind of trading range for that week. And sometimes, you know, that range is kind of set in some ways, unless there's a big kind of buying movement. However, last week, it could have just been that there just wasn't a huge amount of buying and the algos and the traders didn't have something to jump onto. However, today's move and a couple of days ago, some analyst upgrades have given an opportunity or an excuse for traders and algos and all this kind of momentum trading systems out there to jump on the Tesla stock now that we are seeing some buying momentum. All right, number two reason for kind of this big move is that Q1 earnings is in less than 2 weeks. Tesla is slated to announce earnings on April 26th after market close. And overall, there's expectations of a great quarter. And the expectations are just kind of an opportunity and a ripe opportunity for a lot of short-term traders, momentum traders, and computer algo traders to just pick up on the buying. And so this can and often does follow this buy the rumor and sell the news approach. So before kind of an event, if there's a lot of anticipation, a lot of kind of hope for kind of a big event or a big kind of catalyst, people will buy the rumor, algos and all the momentum traders will jump on, increasing the price until that event, and then right at the event or right before the event, they'll sell the news or sell on the print, and thus causing the price to drop, even though perhaps the earnings was a great earnings. And that's why a lot of times, just because a company has great earnings doesn't mean the stock price will reflect that, meaning it doesn't mean that it will jump higher after earnings. A lot of times it's the movement and the momentum before the earnings that a lot of times determines what happens after the earnings. In order to counter the selling the news, oftentimes a company has to deliver even a bigger surprise, right, than what is expected in the market, and much bigger to really, get that next big leg up. All right, number three reason for Tesla's big move today, I think, is that the macro environment is currently supporting growth stocks. So the first few months of the year, you kind of had a rough environment where 10-year treasury note rates were rising pretty rapidly from under 1% to 1.7%. And now the 10-year treasury rates have stabilized currently at about 1.62% or so. And the sell-off and the kind of the market has been moving into kind of taking money out of growth stocks and moving into more kind of these reopening safer plays. And so for the first few months, we saw a lot of growth stocks take a big hit. However, now it seems like the whole market hasn't gone down. So the overall mood and optimism in the market is still there. And so it's more kind of like traders and hedge funds and institutional investors trading out, right, growth stocks into other kind of plays. And now that they've moved out, now it's an opportune time to perhaps get back into certain growth stocks. Now, this is not saying that the hype back into growth stocks is here. It just means that perhaps the temporary movement out of growth stocks might have passed, and now you might see more of a balanced approach where you have funds diversified into various types and sectors of stocks. All right, so number 4, the next kind of reason for I think this and the backdrop for Tesla's big move today is just the whole backdrop of the U.S. federal government spending. So you've got this huge stimulus bill that was passed in the U.S., and then you've got this big infrastructure bill that Biden and the Democrats are pushing, and you've got a ton of money that's running around chasing a limited number of assets. And you've got this phenomenon where we have so much money that's been introduced into the system, and it's causing rising asset prices, especially long term. And so I think over a longer term period, you have equities and real estate and even crypto that's all benefiting from kind of a lot of money being inputted into the system with not enough assets to chase. A further kind of interesting thing is the rise of modern monetary theory, which is, I think, fueling a lot of asset price appreciation as well. So one of the theories of modern monetary theory is that with the government, if they can invest, right, they print money, they invest that into the economy, that the returns of that investment will actually pay off over time, meaning it'll grow the economy and grow people's productivity and incomes enough where later on, just by taxes alone, that the pie will be much bigger. And with the rise of modern monetary theory, it actually matches a lot with what politicians want, which is they want some type of way where they could, so-called fulfill campaign promises of doing a ton of spending without having to, find out where that spending is going to come from. And with that, it also, I think, has been pushing up asset prices because there feels at this moment, at least right now, that there's no end to the spending and the creating of money. And I think all of this is the market is looking forward and is projecting, right, a continuous increase in asset prices. All right. Lastly, I think behind Tesla stock move today is just a bunch of near-term catalysts. So I've talked about Q1 earnings in less than 2 weeks. You've got a full self-driving monthly subscription that's going to be coming out and a wide release of full self-driving that's going to be coming out in the next few months. Then you've got this EV tax credit, which could be uncapped. It could be $100 billion. It could be up to $10,000 per car. And this could actually mean millions of basically subsidized cars that could really, I think the big benefactor could be Tesla in all of this. In some ways, when I think about this, actually Tesla could be the biggest benefactor of the Biden infrastructure plan. And I don't think the market has fully digested this and what this means. A few other things coming up is Berlin factory will be coming online in a few to several months. They will be producing and selling the Model Y in Europe. The Model Y doesn't even sell in Europe yet. And this is a huge new market. You have Austin coming online by the end of the year, and Tesla will be selling the Model Y or producing the Model Y for much cheaper in Austin because of the efficiencies they've gained with new factories, new equipment, etc. And you've got the Cybertruck. And so you've got all of these things just allowing Tesla to expand production, lower costs, increase margins. You have Shanghai factory expanding their Model Y lines. And then all of this, the underpinning of 4680 cells, these new cells that have just much more density, cheaper per kilowatt hour costs, allowing Tesla to really lay the foundation for a cheaper $25,000 car that could have 10 times as much demand as all of their cars right now. So obviously there's a lot of things happening for Tesla, a lot of positives that are happening. And sometimes it just takes, some buying, some urgency, some anticipation, like we saw today in today's market, for traders' momentum and institutions to jump on board in anticipation for an interesting Q1 and also for an interesting next few and several months. Hope this stream of consciousness video has been helpful for you guys. If it has, please like it, consider subscribing to the channel. All of my videos can be found as an audio podcast. Just look for Dave Lee on Investing in your favorite podcast player. And I'm also active on Twitter. My handle there is HeyDave7. All right, we'll see you in my next video. Thanks.